Welcome to this video today, which is all about how to improve any Forex trading strategy by understanding what goes on around key levels in the market, specifically round numbers in Forex trading. So let's say you've got 130 in the British pound or 112 in the euro, and also important levels that the Forex trading community are watching. There is a lot of interest in a level holding or breaking. Now, in terms of what goes on around these levels, most Forex traders don't understand, what actually happens. Okay, so I just want to try and explain it. I want to try and explain it by first of all show you the first ever high frequency trading system. Okay, and how it worked. Now, this trading system worked for over 20 years. It's from Victor Niederhofer. Even George Soros gave him money. Now, it's outdated today. It won't work. However, the logic it's based on, and you'll see why the logic is important, because what goes on around numbers, which he's talking about, still goes on at important levels in the market. Now, I've taken the illustration from his book, and it's to do with securities. However, it doesn't matter. In terms of, it can be securities, it can be Forex, it can be any financial instrument which has a bid and ask. And we all know that we have a spread. So just want to show you this short summary of the system. Then I want to come back and basically discuss how you trade off important levels in the market. It's going to take about a minute and a half. Just going to list it off on a quick storyboard. So here it is. Back in a moment to discuss. I will come back after that short summary there. Now, in terms of the system, obviously he gained himself a huge advantage with the speed that he had with his trading system. Great risk to reward. You battle at the round number, just slightly away, back to his entry out. If it breaks in his favour, that's fine. Now, obviously, in terms of what he's saying about round numbers, it's very true. Most traders, beginners in particular, don't think about the significance of round numbers and place, entry order or a stop order right on the round number. Just simply isn't a good idea. Now, Today, obviously, high frequency trading has moved on. It's faster and there's more money involved. And in terms of the high frequency trading systems that operate today, they're so quick. A few hundred orders can go in and out in the blink of an eye. It's milliseconds. And they do huge size because they're coming in and out of the market so often. So they're really leveraged up. Now, do they trade off round numbers and big levels in the market? I don't know for sure, but I'm almost certain that they probably do. Probably not doing the same things as Niederhofer's system, but they're definitely there. And these hedge funds, big hedge funds, will spend hundreds of millions of dollars on high frequency trading systems. So you got them, I'm sure, hunting around round numbers and big levels. Also, you got all the other traders around the round numbers. It's just psychological. They're bound to attract attention. Now, the bit of advice I give, it's very simple advice, is coming in the market, give it room away from the round numbers. So if I'm coming in, let's say, or want to come in the euro through 112, I'm going to give it room. I'm going to give it 30 pips, okay? So I'd probably come in at through 111.70. Okay, so I normally give it 30 pips on the majors or the pairs that have got heavy speculative interest. If it's a less speculative pair with not so much speculative interest, a minor pair, I might give it less. But on the majors, it's normally always 30 pips. That just basically keeps you out of the way of the battle. Okay, same applies to stop orders. You want to keep it back from the round number. There's an old saying in trading, round numbers suck. They do. They suck price towards them. How often have you seen, for example, let's say the euro's trading at 111.80, flicks up to 112, just comes across the level, takes out some stops and comes back again. So always give it room, okay? I think traders, when they see levels, are very often too quick to come in. Let's say you've got a very well observed level in the media. They want to come in just the other side of it. Let's say if it's a breakout, let the market vote and give it room. Now, another tip I'd give you in relation to coming in the market, so basically with your entry and your stop, take into account the spread. Okay, now on the majors, it's not such an important thing to do, but what I find is, let's say you get a more minor pair, let's say it's AUD, NZD, it's a 10 pip spread. If you're using a stop loss, okay, of 30 pips behind a round number, add that spread in, okay? So take into account the spread as well. Now, in terms of the markets, they are incredibly noisy today. So basically, I just think just paying attention to your order and your stop and keeping it out of the way of the inevitable battle that happens around major levels and round numbers is going to help the risk reward of your strategy. Also, in terms of people who want to trade quickly in and out around round numbers, like day traders or scalpers or whatever, don't even bother, because high frequency traders can make that incredibly noisy. You just end up losing. So a little bit of attention paid to just letting the market vote before you enter, and basically being sensible and placing your stop loss back away from round numbers. They're simple tips, but I'm sure if you're a beginner, they will help you stay out of trouble and just basically help the risk reward of your trading strategy. So that is the video for today. Thank you very much for watching, as usual. Take care. Have a good day.